Hey everyone, I hope you are liking this series. And today I will be discussing about different type of debt fund. If you are liking this video, so like video and subscribe to the channel and click on the bell icon so that from next time when I'll upload a new video, you'll get a notification. So let's start with that. Hey everyone. So in the last video, I have talked about different like the taxation of debt fund and equity fund. So today I will be discussing about that the debt fund. So there are different type of debt fund, and debt fund basically invest in like different money market instrument like corporate bond and government bond, treasury bills, and based on the category of debt fund and the time horizon. Like debt fund is divided into four categories: so liquid fund, ultra short term debt fund, and medium to long term debt fund. Under under these categories there are different type of debt fund, and like according to SEBI norm, like each AMC can invest only one um, fund within each category. So as you can see that under liquid fund there are two type of debt fund. Under ultra short term debt fund there are three types: short term debt fund three types, and under medium to long term debt fund there are six type of debt fund. So for example, let's say I'm going to this website, and under mutual fund, explore mutual fund. If you click on this debt fund, you can see there are different type of funds. And before investing in all these funds, so you should know that what is the time period you should consider before investing in each type of debt fund. So uh, okay, so let's say the first one, that banking and PSU, you can check like each fund from different fund house, and return that they are generating for 1 year and for 3 years, right? One is overnight fund. So these are invest mostly in repo, traps, and call money market instruments. And if you want to park your money for 1 or 2 days, or like within, so you can think about this type of funds. So they mostly give at least 3 to 5% return. So it's more than your saving bank account, but it's more riskier than your saving bank. But if you want like a little high return, then you can consider this type of fund. In case of liquid fund, it in like if you want to park your money for at least 1 to 3 months, then you can consider this type of fund. In this case, like for first 6 days, if you want to withdraw your money, so you have to pay some exit load, and from seventh day you don't have to pay any exit load. So it also provide at around 3 to 5% interest. In case of ultra short term fund, in this category there are three type of fund: ultra short term fund, low duration fund, money market fund. So these are basically investing in government treasury bills, commercial papers, right? So if you want to park your money for 3 to 6 months, you can consider ultra short term fund, and it gives around 4 to 6% interest. In case of low duration fund, it also like 6 to 12 month duration. You can consider this type of fund, and it also return around 5 to 8%. So before investing in any of these debt fund, you should check the performance of the fund manager and the fund. And in case of money market fund, if you want to save your money for up to 1 year, you can consider this type of fund. Let's say you want to buy something within a year, you can consider this type of fund. So these also invest in commercial papers, treasury bills, repo, and traps. So there are like a lot of different types of money market instrument. So we'll discuss in another video, but for this one, we'll talk about like different type of debt fund. So it also are giving like 5 to 8%, right? So if you want to check like any of these fund, then you need to go to this. Let's say I want to check ultra short term, short duration fund. So as you can see, like the 1 year return is 1 year return is 5 to 5.75%, and 3 year return is 7.66%. So ultra short-term fund is basically for 3 to 6 months. If you want to invest for 3 to 6 months, you can consider this one. Then low duration fund. So there are different fund house you can consider, and you can check. And before investing in any of these fund, you should consider the return they have generated since last few years and the fund manager. So next one is short duration fund. If you want to park your money for 1 to 3 years, you can consider this type of fund. So debt fund is basically not as high risk as equity fund, but it surely generate you more than your FD returns or your saving bank returns. So you can consider this type of fund in case you want to park your money more than 1 year, and within 3 years if you want to withdraw your money. And it is low risk and exit load if withdrawn before 6 months. And yeah, before investing in these funds, you should consider the exit load. You should check like what is the exit load you have to pay if you want to like withdraw before the time period. Floater fund, it is basically investing in the fund that are floating, like the instrument that give dynamic interest. So like each debt fund have their interest, but this type of fund have like dynamic interest rate. Sometimes it increases, sometimes it decreases. So based on that, there are few instruments, and this type of fund invest in those categories. In case of bank and PSU debt fund, so these are basically the fund where like fund is investing in bank and PSU bonds, and 80% should go into those type of financial instruments. And here you can see the return is around 8 to 11%. And these are all like expected returns, but you should consider checking all the past performance before investing in all these funds. So next category is long duration fund. Here, if you want to invest for more than 7 years, then you should consider this type of fund. But for long term, I think that equity fund is better. And because in long term, it generates more return than any debt fund. So there are different type of long-term funds like medium duration fund, so dynamic bond fund. So these are like funds where like they invest in corporate bonds, debentures, and government securities, and those like the time horizon of these bonds are around 7 to 10 years. So the maturity period of those bonds are around 7 to 10 years. So if you want to invest for long-term period, then you should consider this type of funds. There is also one fund that is called yield fund. So if you want to invest in these fund mostly invest in government securities. So 80%, more than 80% goes in government securities, and its return is also around 10 to 12%. So let's check in this website. The yield fund is okay. So yeah, if you consider the long-term long-term time horizon, that here for 3 years, it is showing around 11%, 10%, right? And these are all debt funds. So accordingly, the taxation will be the same as like debt fund. So for short-term period, you need to pay around according to your tax slab, and in case of long-term, you have to pay 20% flat after indexation benefit. So that's it from this video.